Well, good morning. I'm Jaginder Rana. Topic for our discussion today is new insurance rules for times of war. New insurance rules for times of war. In India, policies across all major categories like property, health, and personal accident uniformly exclude coverage for war-related incidents. This industry-wide practice stems from the immense and unpredictable nature of war, which insurance companies regard as a systematic risk beyond the scope of standard underwriting. In India, insurance coverage generally excludes non-natural man-made force majeure events like acts of war, political unrest, terrorism, invasion, civil war, rebellion or insurrection, etc. As exclusions and damage or loss caused directly or indirectly by potentially catastrophic and unpredictable losses is not generally insured. So war insurances are common in marine or aircraft or other international trades, as Indian insurance industry typically relies on NMA 464, that is the War and Civil War Exclusions Clause, which excludes coverage for losses or damages caused by war, invasion, and acts of foreign enemies. Acts of foreign enemies, civil war, and other similar events. So even in 2611 attacks, the said clause was effectively invoked by insurance providers, and it was echoed that damages caused by any terrorist organization are too great to be covered by any general policy. It would be interesting to witness the fate of insurance claims arising out of cyber attacks, failure of business deliverables, breach of commitments due to infrastructural disruptions, etc. As such, claims arise indirectly out of war and cannot be directly linked to war and terrorism outages. So such exclusions apply regardless of whether the war is declared or undeclared, making them a fundamental clause in most insurance contracts, especially amid rising geopolitical tensions. Most life and term insurance policies in India contain what is commonly referred to as a war exclusion clause, which disqualifies any claims arising from death caused by war, invasion, revolution, or act of foreign enemies. This applies not only to armed forces but also to civilians, particularly if the death occurs in a conflict zone or due to hospitalities. Even fully paid up policies can be rendered void if the insured dies in circumstances traceable to war-related activities. Further clarified that claims can be rejected if the death results from being present in a high conflict zone even without any active involvement. In cases where an Indian expatriate living in the Middle East passes away due to natural causes such as a heart attack and the death is not connected to any ongoing conflict, the insurance claim could still be processed, assuming the policy does not restrict coverage based on locations. When it comes to property insurance, the exclusions are equally clear. The standard fire and allied perils policies in India do not provide Any compensation for property damage caused by acts of war, invasion, or civil commotion escalating into a war-like situations. India carried out Operation Sindoor. Insurers began receiving inquiries about war risk cover. Our underwriters were reluctant to provide such coverage for landed properties once hostilities had begun, since the situation was already considered proximate to war. Although cargo insurance can include war risk provided it is limited to the time goods are in transit, this must be purchased through a special endorsement and for an additional premium. War risk coverage is closely tied to the reinsurance market. During wartime, reinsurers may suspend treaties or withdraw coverage entirely, leading to inflated premiums and reduced availability, particularly for marine cargo. Health and personal accident insurance policies in India also systematically exclude coverage for injuries or fatalities resulting from war or warlike operations. These exclusions applies uniformly whether the insured is a civilian or not. The policyholder must carefully review the documents for terms such as acts of war, civil commotion, or terrorism, which often signal non-compensable scenarios. Insurers offer very few, if any, standard products that provides relief in such cases unless a highly customized plan is arranged in advance. So despite these exclusions, the industry does offer specialized insurance products for high-risk circumstances. War-related coverage is typically found in specialized insurance products, particularly within the aviation and maritime industries. While landed property remains difficult to insure once conflict begins, cargo in transit can still be protected through endorsements, albeit at higher premiums. Insurers rely heavily on reinsurance arrangements to support these specialized products. If global reinsurers such as those influenced by London-based Joint War Committee mark a region as high risk, insurers may either cancel existing war risk policies or revise their terms, typically with a 7 to 30-day notice period. So these updates are routine during periods of heightened geopolitical tensions and directly affect the availability and pricing of war-related coverage for commercial clients. For members of the armed forces, public sector entities like the Life Insurance Corporation or dedicated military branches offer group insurance plans that include protection against war-related risk. Such plans are not available to civilians. However, some corporate policies in sectors like oil and gas, diplomacy, or international media can be tailored to include group accident or life insurance with specific war-related provisions. High-risk travel plans offered by companies such as Tata AIG and ICICI Lombard may also include terrorism cover under health or accident policies, though not under life insurance. So given the wide-ranging exclusions, experts urge policyholders to thoroughly examine their insurance documents. Individuals pay attention to territorial limits, optional add-ons like accidental death riders, and the presence of terrorism coverage. So what happens in Israel and Ukraine? In Israel, the protection of household belongings against war-related damages is established under the property tax and a compensation fund law of 1961 and its accompanying regulations. So according to this legislation, the state of Israel undertakes the responsibility to compensate its citizens and residents for direct and indirect damages caused by acts of hostility or wartime operations. This state guaranteed insurance applies to all citizens and residents who are in their place of residence at the time of damage, and it is provided automatically and free of charge. So under this legal framework, household items are insured against war-related damages up to the specific maximum amounts determined by the type of items. This basic level of coverage ensures that all residents receive a minimum degree of financial protection for personnel belongings damaged in times of conflict. However, the law also allows residents to extend the coverage beyond the default limits if they wish to insure their possessions at a higher value. This extension is optional and subject to an annual application process which must be completed by December 31st each year. Not all items are eligible for coverage under the state insurance schemes. Certain high value or non-standard items such as artwork, jewelry, antique and cash are explicitly excluded and cannot be insured by the state of war-related damages under any circumstances. So for those choosing to increase their household insurance coverage, the additional premium is calculated at a rate of 0.3% of the added value they wish to insure. However, there is a statutory limit on these extensions with the total additional insured value capped at 9,79,624 ILS, that is Israeli shekel. Once the application is completed, residents are guided to payment stage to finalize the process and activate the enhanced coverage. Similarly, in Ukraine, the CMS laws report titled War Damage in Ukraine, All You Need to Know to Obtain Compensation, published in May 22, 2022, provides a comprehensive overview of the legal avenues available to Ukrainian citizens seeking compensation for damages resulting from the Russian invasion. So according to the report, as of May 2, 2022, Ukraine had suffered losses amounting to approximately $600 billion due to the war, with direct damage to property and infrastructure estimated at $92 billion. The World Bank on April 22, 2022 estimated physical damages at roughly $60 billion. The report outlines the process for affected individuals to submit compensation claims through Ukrainian civil and criminal courts. And a significant legal development in April 2022, Ukraine's highest court ruled that Russian state immunity would not apply to civil cases seeking compensation for war-related damages, thereby affirming the jurisdiction of Ukrainian courts to hear and adjudicate such claims against the Russian Federation. However, the report also notes challenges, including procedural and practical hurdles in pursuing claims against Russia in Ukrainian courts, while martial law remains in effect, and potential issues with Russia's immunity from enforcement of court decisions in foreign jurisdictions. In India, the war-related damages are not covered in the same manner as some other countries. It has been a matter of debate not only in India but around the world. The debate is only intensifying given the recent spike in geopolitical tensions in Europe, West Asia and East Asia. There have been calls for policy interventions, but with insurance increasingly becoming a corporate decision and a military conflict can cause damage of the extent, for example in Ukraine and or Gaza, that may push insurers to bankruptcy. Our Israeli and Ukrainian models could be improved upon to offer general protection to people living in geographies that are vulnerable to geopolitical or bilateral tensions. Thank you. Thank you very much.